Yo, what's going on, guys? Today we're actually going over three high growth stocks, and these stocks in particular, I've carefully selected them so they have some insanely good financials. So their financial condition is very good. And the first stock we're going over, I don't own, but the second two stocks I actually own inside my MooMoo portfolio over here. So two of these stocks that you see right here are going to be talked about, but the first stock I actually don't own across any of my portfolios, and that is actually ticker symbol LSCC or Lattice Semiconductor. Now, I'm going to show you the bad news about this company first, but then when I show you the financial second, you're going to be like, well, dang, they are doing very well financially. But the bad news is that most of the revenue doesn't come from the United States. It comes from China, Hong Kong, Europe, Japan. That's what sucks about them. That most of the revenue actually doesn't come from the United States. So if that's okay with you, then let me show you the amazing financials of this company. All right, so here we are on Webull. As you can see right now, it's kind of at a good valuation. It's definitely well above its 2020 pandemic levels of, $25. But look at the market cap. This is why I think the company is very cheap. It's $8.83 billion, dollars, all right? And let's go ahead and see what their numbers are doing. So we'll just look at net income first of all. Look at the bottom. Those are the year over year numbers. So net income's up 16% year over year. Total revenue's up 11%. If we just like zoom out, as we can see, the financials are amazing. Look at their balance sheet. This is phenomenal. Look, so from 1 year ago, they have the roughly same amount of assets, right? 758 million, now 780. Well, look at the ratio at the bottom in orange. That's the most important thing. That's the assets to liabilities ratio. And as you can see, their liabilities are down like crazy or their debt. So you now own a lot more equity in the company. So whenever they're buying back debt and keep the same amount of assets, that's always a great sign. And let's look at the free cash flows down here. So look at this, $82 million dollars in the most recent quarter. If we zoom out, as we can see, that's well above, the 2019 levels. And they're very, very profitable, like I said. But what we want to look at is this right here. Look at this. They just went debt free as we were looking at their assets to liabilities ratio. That's because, look, their debt is completely gone. They now have zero debt. That is amazing. And if we go to their cash, they have $114 million dollars of cash after paying off $40 million dollars of debt. So they are in a very healthy spot right now. Remember, the market cap's only $8 billion dollars and they now have zero debt. Let's also check out this. So, look, the interest on their cash now, because they used to be paying interest because they have debt. Now they have zero debt and they're holding on to cash. They can now get the high yields, the 1 to 3 week treasuries. They're making, or at least in the most recent quarter, they made $1 million just from their cash. And if we go to their issuance retirement of stock program, they're actually buying back some shares. They bought back 9 million in the most recent quarter. It's nothing crazy, but if we go to like their diluted weighted average shares, it's down 0.08% year over year. So actually, you're just not being diluted at all with the company. And now they have zero debt. So I'm very curious to see if they're going to start doing a new stock buyback program with all this cash flow that they're making. But then again, you also got to remember they're Chinese based, there's regulations and stuff, all kinds of risk with that. So yeah, that was the first stock, Lattice Semiconductor. Also, I just want to quickly say, if you're enjoying the video, don't forget to drop a like for me. It really helps me out a lot. I feel like I show you all the real numbers of a stock that no one else shows you. And I do it very simply, and I hope you appreciate that. So yeah, the next stock we're actually going to go over is one I own in this portfolio, and that is actually ticker symbol PERI. And I'm going to show you the financials first. Then I'm going to show you what I read some random Seeking Alpha article about this company a couple days ago, and we're going to see what their price target is for this $30 stock. So remember, the market cap right now is $1.44 billion. Look in the top right. They don't pay a dividend, and their PE forward ratio is 12.91. But their market cap is literally, it's almost like a micro cap. It's $1.44 billion. So let's see how good they're doing. I can't wait to show you. So look at their net income. First off, their net income is amazing, up 28% year over year. If we zoom out, it's well above, 2019 levels. And if we go to total revenue, even total revenue is growing 16% year over year. And here's the most impressive part. Look how much their assets are growing. 1 year ago it was 770 million. Now it's 940 million. And guess what? This company has zero debt, so the liabilities aren't debt. I'll show you what they are later, but look at this. Here's their operating cash flow or their cash flows. This is what we really want to look at for the business, see how they're doing. And as we can see, they're doing great. Look at these numbers right here. $40 million, $47 million. All right, so check this out. Yeah, they have zero debt. So yeah, they don't owe anyone any money. So I love when companies have zero debt. And if we check out their cash on hand, remember their market cap right now was $1.4 billion, something like that. And just in cash, they have $200 million in zero debt. So already like 20% of their market cap is just in cash. And if we go over here, look at this. Look at the interest that they're making on their cash right here. So just for that $200 million in cash, they made it in pure profit, $6.1 million. So that's what's so cool about these high interest rate environments for companies with zero debt. They can milk the high interest rates, which Perion is doing like crazy. And if we go to their total common shares outstanding, or their issuance retirement stock program, look at this. So they are issuing shares, but it's just to pay employees, and they're not issuing nearly as much as they were 1 year ago. Look at this, $3 million the same quarter 1 year ago. And so if we go to their total common shares outstanding, you have been diluted 5.32% year over year, but the net income growth well outpaces 5% every single quarter. It is amazing. All right, so here was the Seeking Alpha article that came out 5 days ago. I'm just going to quickly summarize it. So if you look in the middle here, we arrive at a price target of $46, representing a 62% upside from current price share levels. And how does he calculate that? He shows you the two charts right here based off a PE multiple. So if you're really interested, you could, screenshot that or come look at this later. But yeah, those were all my bullish reasons for Perion Network. Their market cap, it's because their market cap is only $1.44 billion. They're growing, zero debt, a lot of cash, and their cash is making money because of the high rates. So yeah, that's kind of my bullish thoughts on Perion Network. Now let's get into the last and final stock. All right, guys. So the last stock on the list is actually DocuSign stock, ticker symbol DOCU. And look at how the stock is done. So I understand maybe why you wouldn't want to buy this one compared to the other two because it's already gone up so much. But let me try to show you why. So one, there were news about a buyout. And whenever that buyout news happened, a bunch of people on Wall Street gave a valuation to the company and found it was severely undervalued. So that's why it pushed it up. But anyway, let's actually look at their numbers. So first off, net income. They're finally net income positive for the first time ever. They used to lose so much money, and the fact that they're now making money is a great sign. And a lot of people think that, hey, DocuSign won't grow because this was all a 2020 pandemic play. Nah, man, look, they're growing 8.5% year over year, and it's everyone's, back at work. Everything's not just all digital. People are going back to offices, but DocuSign, that just shows that the need for DocuSign and signing things digitally is there's always going to be a need for that. And DocuSign owns most of the market share. But here's their balance sheet, which is really good. So look at this. 1 year ago, their assets to liabilities ratio was 82%. Now it's 71%. So you now own a lot more equity in the company, 10% more, which is fantastic. And their assets have grown and their debt has nearly stayed the same. So look at their operating cash flows or their free cash flows. This is the best part about the company. Look at the growth at the bottom, 400% year over year. If we take the past 3 quarters, look at this. It's well over $200 million every single quarter. And if we zoom out, that's well above, any time previously ever. So right now, they're financially very good. They're growing. But here's the most important part I wanted to show you. They have total debt of $689 million, only million, and that's down 4.53% year over year. So they have been paying off debt. But if we go to their cash, they can pay off all the debt right now if they wanted to, because look, they have $1.19 billion of cash. Look how much that cash is up year over year. And guess what's so good about having cash right now? Yep, you get the interest rates. So they're making $16 million just in 1 quarter off their cash. And remember, their market cap was $13 billion. So 1/13 of the market cap is just in cash and equivalents, $1.19 billion. But you also got to subtract debt from that. But here's another thing. We want to look at their total common shares outstanding. And you've only actually been diluted 1.42% year over year. The net income has grown well more than 1.42% year over year. And they actually have been buying back their own stock. They like to pay employees with stock. That's why they're buying back stock, and yet the total common shares outstanding are still going up. But they're paying employees with stock and then buying back some stock too. So it's kind of best of both worlds because employees also want to be incentivized, and the stock has done great. So yeah, those were these 3 stocks. Hope you guys really enjoyed. Don't forget to drop a like on the video. It really does help me out a lot. Also, if you want to get either the app I use to look at all the financials right here, this is called Webull. I'll leave an affiliate link in the description. Or if you wanted to download MooMoo, which is this app right here that I do my portfolio updates on, I'll leave an affiliate link to that in the description as well because I don't make any money off this YouTube video. There's no YouTube ads, so you didn't have to click any pesky 5-second skip video ads. But yeah, I hope you guys have a great rest of your day. My name's Nathan Ross.